Welcome back and thanks for staying with us. We're joined by George Joseph, who's the CIO and CEO of ASK Investment Managers. Welcome, George. Uh, let's start off by contextualizing how you're seeing 2026 and in this uncertain environment, how should one look to kind of place their bets?
Thank you. Thank you for having me here. It's an interesting time in markets. The global uncertainties are weighing, and a lot of good measures from the government has come in the previous year. What we are seeing is that in the valuations in the large cap space, especially Nifty 50 companies are looking extremely attractive, and it is probably one of the cheapest point relative to mid and small caps over the last 2 decades. And that looks very interesting to us. And so all our portfolios, what ASK manages for our clients has been skewed towards this view. That is broadly, I would like to talk about the markets.
George, hi, good afternoon. Talk to us about what your expectation is from the earnings season. We're kickstarting the earnings season next week, the Q3 earnings season, that is. Where do you think leadership could emerge in the market going ahead? And perhaps, is this the quarter where we see some sector churn happening?
Definitely, yes, because many things have happened in the previous quarter. One is INR has depreciated dramatically, and in the same case, we have seen that there is a good amount of turmoil developing in the US markets. When it is talked about the AI wave, whether it is dying down or not, but the breadth is definitely moving towards a few names in US, especially when it comes to the earnings growth. And that is the same case for, when we look at the market participation as well. So the breadth is significantly deteriorating, which is concerning globally, which means that there is more pressure in the markets from the global standpoint. In that backdrop, when you look at the earnings in India, the tariff deal is not yet done, and people were all waiting for that. And at the same time, that is getting prolonged, and you are seeing there is a good recovery cycle that can kick in from the domestic economy-oriented sectors, be it banks, auto, and other consumer-related businesses. That will be the more highlight of this quarter. But at the same time, what we have to remember is, there are a lot of measures which has been taken by the government and RBI in terms of rate cuts, in terms of GST cuts, and so on and so forth, which also will start playing out in this year. So in my view, and what we believe when we are looking at our clients' allocations, this is a time to look at some of the high quality names in the large cap space, which we can place our bets on. And that's where the recovery cycle also is going to be predominantly beneficial from the earnings cycle perspective. So we are very bullish on the financial services space, especially banks and large private banks, as well as some of the NBFCs, where the benefit will flow through ultimately. And also when we look at the cement companies' valuations, last quarter was a washout quarter, and there could be green shoots visible from this quarter as well. So we look at from valuation perspective, we like these two pockets the most. But at the same time, in terms of business cycle, we like more of India-centric, domestic, cyclical, that be it real estate, engineering, capital goods, energy transition. All these becomes a good long-term theme to play from Indian context.
Let's unpack that a little bit, George. Let's talk about energy transition as one of those themes, and especially interests me because it's a decadal theme. How do you play that? And do you have enough comfort in terms of the valuations and some of the plays with regard to energy, especially new energy?
Yeah, some of the not specifically new, if you look at from the entire energy transition space, we can look at be it some of the beneficiaries of the the new energy companies, and as well as the intermediaries are also very interesting to look at. So every sector, when we look at what we do is we look at the major beneficiaries and the second derivatives and tertiary derivatives which can benefit out of it. When we look at from that perspective, there are many companies to play on. But at the same time, it's a highly volatile sectors, be it manufacturing, engineering, capital goods, and all these are highly volatile sectors. But that is a cycle we are in. I would relate to it is not at the same fashion at which what we have seen between 2003 to 7, but in some shape or form, this is looking to me very similar to that. At the backdrop of low China growth and low India growth kind of scenario. But the cycle is more towards this specific domestic cyclical themes. So there are few pockets where we like at this point in time, and we are betting our clients' money on that.
Okay. And George, what is your take on metals? And I ask this given the fact that gold prices continue to be volatile, but we're seeing a little bit of profit taking in silver prices. But then again, they spike up once again, so volatility over there as well. On the back of that, where do you believe Nifty Metal as an index is headed?
So the metal index in the last 5 years has already gone up 6 times, and it is a massive rally, and that was the best performing sector in 2025. And what we believe is that some sort of breathing time is required for the sector to come back to normalcy in terms of valuation as well as in terms of expectations. So we are almost zero on exposure towards metal companies, and differentiating between metal companies always a tough task. Steel company is a steel company after all, but at the same time we can look at some of the beneficiaries or the companies which are related to more value-added commodities. That's a place where we like to bet on. But as we speak, the commodity exposure to our clients' portfolios are significantly low.
Okay. George, you suggested that SMIDs will likely outperform as well, because we've seen a bit of a correction in terms of valuations. How do you expect the performance, and in what pockets do you believe that the performance will be the strongest?
No, I don't know whether it got it wrong. I didn't mention that SMIDs will outperform. What I mentioned was the large caps is the space to be in. It is looking very, very attractive to me. I am more of a mid and small cap guy all through my career, but ultimately we have to look at where the clients can make money. So from that perspective, even after this good correction in many stocks, what we have seen in SMIDs, to me, the large cap space is the place where you can make good returns, especially say private banks. Large private banks look very interesting. Some of the NBFCs are looking very interesting. Cement companies are looking interesting. So there are many pockets which you would like to bet on in the large cap space, and Nifty 50 companies in particular. To my mind, it is trading at many companies are trading at a record low valuation relative to the mid and small cap. So I will be significantly circumspect on the valuation even after this correction in mid and small cap. But earnings growth will be a benefit. We will look forward for how the earnings recovery will play out in the mid and small cap space, which to my mind, it will be more surprisingly benefiting the large cap space itself. So our bets are on large caps.
The bias continues to remain on the larger end of the market. George, on that note, we'll let you go. Thanks once again for speaking to us. Lovely to have you on board.
Thank you. Thank you.
Okay, viewers, with that, time to slip into a very short market.